The latest data on Ethereum's November trading volume reveals a surprising trend that most investors might be overlooking. Spot trading volume hit $375 billion, with an additional $35 billion from ETFs, signaling strong institutional participation. This influx of organized liquidity, especially from ETFs, is like a new, transparent ledger entry, adding stability to the market despite price fluctuations. If you're in crypto, the IMF just issued a stark warning about tokenized markets that could impact your portfolio. While promising efficiency, these markets, driven by automated smart contracts, are prone to extreme volatility and flash crashes, far worse than traditional systems. Lack of interoperability and cascading smart contract failures could lead to systemic shocks, prompting governments to step in with strict regulations. Imagine if hundreds of millions of dollars in stablecoin suddenly moved on the blockchain. What would that mean for the crypto market? Whale Alert reported multiple massive USDT transfers, both into and out of OKX, totaling over $220 million. These movements often signal institutional repositioning, potential trading activity, or strategic asset allocation, impacting market liquidity and sentiment. Imagine Ethereum transactions costing 70% less, with the network handling triple the capacity. Ethereum recently boosted its block gas limit to 60 million, a 33% increase, significantly enhancing processing power. Developers now eye a 180 million limit by 2026, aiming to cut fees and improve scalability, though centralization risks are debated. Why is BlackRock pouring hundreds of millions into crypto when retail investors are pulling back? In just 3 days, they acquired $589 million in Bitcoin and Ethereum, making their Upbit ETF their top revenue source, generating hundreds of millions in fees. It's a classic move. Institutions are buying the dip, while the Crypto Fear and Greed Index shows retail in extreme fear. If you're trading crypto without deep on-chain insights, you might be missing critical risks. OKX Wallet now integrates a DEX aggregator with advanced token insights, revealing developer holdings, sniper activity, and risk signals for self-custody trading. This empowers users with crucial data, but always remember to do your own research before making any decisions. $30 million crypto heist at Upbit just uncovered a critical wallet vulnerability that could allow private keys to be deduced. During an emergency audit, the South Korean exchange found a flaw allowing private keys to be mathematically derived from public transactions. While patched, it's unclear if this bug caused the $30 million breach. But Upbit pledges to cover all losses and revamp security. The launch of Dogecoin's first US spot ETF has triggered a significant market event, revealing a surprising bullish technical pattern. Following the November 27, 2025 ETF debuts, Dogecoin broke $0.1525 resistance with a 135% volume surge, forming higher lows and an inverse head and shoulders. This technical structure targets $0.179, potentially 27 cents, emphasizing that maintaining support above $0.1548 and consistent volume are critical for this rally. If you're tracking stablecoin giants, a major strategic pivot by Tether could redefine market expectations. Tether has ceased Bitcoin mining in Uruguay due to energy cost disputes and a $4.8 million debt, dismissing 30 employees. Simultaneously, Tether paused Bitcoin purchases, becoming a top Q3 gold buyer with over 120 tons, even as S&P Global downgraded USDT to weak over reserve concerns. Overtakes just launched a new DeFi ecosystem on Morpho, making Japan's JPYC stablecoin lending and borrowing simpler than ever. This Curator initiative streamlines complex setups, allowing users to easily lend, borrow, and generate yield with JPYC on global blockchains. This move taps into the surging non-dollar stablecoin market, expanding JPYC's reach and liquidity in Asia. The crypto world is buzzing. One decentralized perpetual futures exchange just hit an unprecedented $9 billion in daily volume. Lighter, a Perpetual, has now officially surpassed major rivals, like Hyperliquid, claiming the top spot in trading activity. This significant milestone highlights the growing dominance of efficient infrastructure in decentralized finance, intensifying market competition. A groundbreaking shift is reshaping crypto markets. Decentralized exchanges just hit an unprecedented 37.4% of spot trading volume. CoinGecko reports this DEX to CEX ratio tripled from 6% in 2021 to 21.2% by 2025, fueled by Memecoin Mania and platforms like PancakeSwap. This surge, including perpetuals, signals a steady preference for on-chain trading, where transactions are like automated vending machines.